Team coming to you today from Dallas, Texas, week of January 30th. Market update report. Chris Madrid in the house as well. What's up, Chris?
Hey, man.
Happy
Thursday.
Happy third day of snow day. I know we had a big report come out yesterday, so we're going to move on to our current mortgage trends with Chris Madrid. Let him update us on what's going on. The national interest rates.
Yeah, great. Great news. So it's Fed week, as we say when the Fed's meeting. So the Fed met yesterday, and we got some good information from the Fed in general. Interest rates are down yesterday and today. I think I posted on social media that rates ended the day yesterday at essentially their lowest point in the last, I think, 5 or 6 months, since rates started creeping up last year in September. So thankfully rates are down. On average, you can get on a conventional loan, 30-year fixed, somewhere between 6 and 6.3 is probably what you're looking at from a rate perspective. On a 15-year, that's down to the low fives now, 5.2 to maybe 5.4 or something like that on a 15-year. And then, the great thing, I specialize VA loans, love our veterans. VA loans are now, yesterday I was seeing 5.5 on a 30-year fixed on VA. FHA's in that 5.6, 5.7 range. So like we've been saying, right, rates are trending down as inflation starts to come down. Mortgage rates will also continue to trickle downward. It's like, again, we can't say this enough. It's not going to be in a straight line. It's not going to be overnight. It will be, we'll kind of have slow, kind of a gradual up and down as we go. Some information that came back earlier this week: new home sales headed up in December 2.3%, which is great. Great news from a market perspective. What you'll hear in the media, of course, is that they're still down, right, from a year ago. But ultimately, it's a positive trend, right? And nationally, sales activity has been rising for the past 3 months in a row. So that's good news. That also speaks to just from a buyer consensus, right? I think buyers feel like, hey, interest rates did peak back in October, and they've now started to come down. Like we were talking last week, also, right? Is if you're in a 3% mortgage now, you're definitely not even considering buying at a 7% mortgage rate, right? So it's hard to trade in a 3% $400,000 mortgage for a 7% $800,000 mortgage, right? But as rates continue to come down, trading in a 3% for a 5% maybe, or 5.5%, that's probably more realistic than 7. So activity will continue to increase. I keep hearing this crash and bubble stuff, and I don't understand. I'm like, there's all this information, there's all this data out there. What are they looking at? Is what I often ask. That is making them think that there's a housing bubble, right? That's the part that I don't get. So also encouraging this week, pending home sales index of signed contracts on existing homes rose for the first time since last May. So that's great news as well on pending home sales. So we're headed in the right direction. If you want to click over to the next slide. So this was some of the information that came out yesterday from the Fed. Yeah, that's perfect. So the federal funds rate yesterday did go up as expected by 25 basis points. That puts the federal funds rate in a range of 4.5 to 4.75. Again, that's not mortgages. I got a bunch of calls yesterday. Hey, our mortgage rate's at 4.5 to 4.75, and no, that is not the case. That is the federal funds rate. Essentially, that's what banks lend to each other overnight. So that's not a consumer rate. That is tied to, credit cards, equity products, short-term borrowing. But again, as expected, it was up. They unanimously agreed to raise the federal funds rate by 25 basis points. So Powell, of course, the Fed chair, spoke yesterday. So there's two components to the to kind of how the market's going to digest this information. So the press conference, Powell did say that he sees ongoing increases as appropriate. From a market perspective, there is an overreaction that could happen, right? If the Fed increases too much, or they don't kind of change their tune. And thankfully yesterday, as we don't have to go through every single one of these, but he did say, hey, we're probably going to maybe increase a couple more times, right? And most likely it would be 25 basis point hikes, not the 0.75, not the 0.5 that we saw this past year. So that's all great news. That hopefully they are learning from their past mistakes and aren't going to bring the economy into a screeching halt. But again, there will be kind of I would imagine a further slowdown. Costs are coming down, right? So we're seeing that obviously inflation's coming down. Good prices are coming down. So there's all these things that are happening that are good for decreasing inflation and lowering mortgage rates. Yeah, we can jump to that real quick. Now we were testing the that 200-day moving average. You can see there's those two little lines up there. It's trending upward, which is great, but it's like we've been saying, it's just going to be it'll be kind of an up and down. We finally got above. You can see that kind of what they call a Fibonacci level there, but it's still beneath that 200-day moving average, which is going to be a tough one to push through. Huge shout out to our friends over at MBS Highway. That's where we get a lot of this information from, and we've been watching it. We've been at it for a long time, but our friends over at MBS are the ones who provide this data and information. So very good information. So we appreciate them doing that. But yes, we're headed in the right direction. I think right now we're 101.73. Which we see a lot of changes throughout the day, but hopefully it'll continue in this trend. There's still a lot to digest over the next couple of days, but a lot of information.
I believe I read in this chart, I guess would solidify that basically rates have stabilized and had the smallest moves, I think, over the last 5 months is happening right now. Is that correct? They don't have as big of swings as they've had, I believe, since about 2021. We're probably got the most stable rates. Is that correct?
Yeah, I mean, overall, I mean, I think mortgage rates have stabilized, right? I don't see us going. I had a call yesterday. A customer was like, "Hey, do you see us going back into the sevens?" And I honestly don't see that. I feel like we're headed down. I also feel like the new norm of what low mortgage rates is going to be, is going to be like, maybe 4.8 to about 5.2. I think that's going to be the new norm of mortgage rates. And that could be in 6 months. It could be in 12 months. It could be in 24 months. Right. But from a going up, as far as mortgage rates are concerned, I think we have peaked and we're now kind of heading down. So ours in a year or two, right? So that all those differences. So that's where having somebody, having a team in your corner that can look at all that stuff for you is a massive benefit. Because again, I know, one of the things that I hear often as well is like, oh, well, the sales agent told me that I don't need a real estate agent. And I'm gonna get the benefit of that 3% commission or whatever it is. And that is not the case, right? They've already built in the 3% that they're going to pay to a real estate agent in their profit margin, in the sales price of the home. Same thing with these closing costs that they're supposedly giving. It's been built into the price, right? So there's not. I promise these builders out there are not out there to just give away thousands of dollars, right? It's already built into the price as far as what you're paying for it. So, just make sure you're looking at all of the aspects of it, not just that one component.
Yeah. Yeah, Amy and I have been over some of these financing documents where these builders are paying, I say paying with quotes,
Yeah.
large sums of money. But whenever you dig into it, you're paying for $10,000 over 30 years, which ends up being $30,000 or something. So
Hundreds.
um,
Yeah,
you
probably more.
gotta definitely dig in, see if what you're getting is, truly a benefit to you, or if it's going to affect you down the long run and cost you more
Mhm.
in the end. So there is a ton of real estate news floating around these days. If you want that real scoop, get in touch with Chris Madrid or myself. The other morning, I was speaking of news floating around. I was reading, an article from Yahoo.com, and it said, housing markets getting ready for historical yada yada yada. So I opened up the article, and it had nothing to do with the housing market. It had everything to do with real estate agents possibly losing the buyer side of the transaction. That's what the whole article was about. It was about supposedly the federal government is trying to eliminate sellers having to pay the buyer commission. So that's the way it is in many European countries. You don't have representation on the buyer side. It's kind of buyer beware, which, leads me to believe that's something we probably won't go to because we are generally looking out for the consumer in our country. It's part of what our capitalist system is built on. So anyway, but just further proof that the headline doesn't always have to do with what's
That's right.
written in the story.
Yeah,
This
for
was
sure.
literally an interview with one of the $1 million listing dudes out in LA, and it had nothing to do with home values, home prices. It had nothing to do with an oversupply of inventory and not enough buyers to cause a housing crash. But the whole article was talking about the talk of taking away buyer's agents' commissions paid by the seller. So pay attention. If you read a headline, maybe open it up and read and see what the actual story is and see if it has anything to do with real estate or if it's just clickbait.
Yeah,
Uh,
that's the crazy thing. The crazy thing about that, right? And we don't want to keep beating this beating the dead horse here, but that sounds like, hey, I'm gonna go. I need a surgery. I have a surgical procedure I'm gonna do. I'm gonna eliminate the doctor. Right? I don't need the surgeon. I can do it on my own. Or hey, I have to appear in court. I'm just gonna go appear on my own. Right? You can represent yourself. You don't need an attorney.
yeah.
Which happens, but typically the outcome is
Yeah.
not the outcome. That is so it's so crazy to me. There's so much in there. Seller's disclosures, all these things that a consumer should know or a buyer should know before purchasing. That one, they have no way of knowing or even knowing what to ask, right? Is oftentimes. So that would be catastrophic if something like that ever happened. Anyway, that's neither here nor there, but
All right. Need real estate information? Get with Amy or I at 469-369-0873. Get with Chris Madrid for your financing at 214-734-1531. Other than that, we're going to wrap it up for this week, and we'll be back next week. Drink some more coffee. Try to stay warm in the ice. I think it's starting to melt off. So maybe tomorrow we can get back out into the world.
Yes, for sure.
Till then, peace out, and we'll see you next week.
See you on the flip side.